Hi everyone, welcome to today's Friday Roundup. Again, we recap on every Friday the biggest pieces of news that are impacting the crypto markets over the last 7 days, and also anything relevant that is happening currently. And nothing is more relevant than what is happening this evening in the US in a place called Jackson Hole, where the Federal Reserve holds their Jackson Hole Symposium Summit. Funny name, but has enormous consequences for the financial system currently, for forecasting and for next year. Also in terms of interest rates, we'll get more guidance on that. That's essentially what the Fed do. It's a summit every single year where they come out and just give everyone more information on where the economy sits, where they see it going in the short term, and where they're looking to maybe change policy in the longer term. So that is all about the Jackson Hole the summit happening this evening, around about midnight. So 10 p.m. to midnight Australian time, depending on where you are. I'm not 100% sure when exactly Jerome Powell's comments come out, but do expect, and this is a short-term analysis, short-term focus, do expect volatility in markets leading into this event and after the event. So this goes over 2 days. Now it's the 25th to the 27th, but in Australia that really will be around the 26th to the 28th when you balance it out. But yes, has huge implications for the short-term narrative. Markets are still fairly neutral to bearish in terms of what they're forecasting will be. Full on expect that we see 0.75 interest rate rise for September, November, potentially another 0.5, and then the ideal scenario from this. So just throwing it out there, just in simple terms, what we really want to see from the Fed for risk markets, and risk markets are crypto, US equities, for those markets to feel a lot more confident in going forward, we want to hear from the Federal Reserve that inflation is in the back view after a lot of prices are beginning to tick back in terms of commodities and other metrics they're looking at. Inflation is going to be sticky, it's going to be hanging around. However, the Fed are now really worried that the US and elsewhere are heading into a recession. So they're going to have to try and pivot policy over to fighting a recession at some point. Doesn't mean it has to be at the end of this year, but likely it will be next year where they're looking to full on fight inflation. So what we want to hear from Jerome Powell is something along that lines. It's all about language. We want to hear what he's saying, because a lot of what the Fed does is jawboning in another way. It's kind of like marketing. Their actions are literally to raise interest rates and to lower interest rates. You can get into what they do with easing and tightening with bonds. But they have literally lever on, lever off, economy on, economy off. That's what they're doing. And so the rest of it is all marketing. It's about what they're saying. And when they speak, or when Jerome Powell speaks, markets move. So again, we want to see that they're coming out potentially with the interest rate rise, and then we want to hear them say that they're going to either lessen that with incremental discounting on those interest rates. So 0.75 for this month, 0.5 next month, 0.25 for December leading into Christmas. If we hear that kind of language, then we know that they are more focused on recession, and they're likely going to have to pause or cut interest rate rises next year to fight the recession, where they need to incentivize growth. And that is a big positive for, I know it's crazy heading into recession. You think, okay, well, stock markets and crypto and whatnot should be going down, but there is a lot of capital out there and it wants to go somewhere. So again, we want to hear that language that they're looking to pivot to fight a recession versus inflation, because in a nutshell, it means they're going to stop the severe, aggressive tightening of the economy that they're doing. And tightening the economy like they're doing raises the cost of the US dollar and raises the cost of capital globally. And a high US dollar means crypto is more often than not down. It is the denominator. Everyone wants dollars at the moment. So that's where we sit. So pay attention for tonight's Jackson Hole Summit. It is a huge potential pivot point, and I'm not going to say the full pivot, but a pivot point just in the same term where we could see the language and the approach of the Federal Reserve change from what they have been over the last, or let's say since January. We've seen a really prolonged period of tightening. Okay, so that's the biggest news that is happening today for this week. Not a tremendous amount of news across the board for crypto this week. It's all been in the macro sphere, but this was big for me, and it really nicely ties in with our newsletter that we released yesterday. So our monthly newsletter, if you're not part of it, subscriber to it, you really have to do it, because it gives you the 360 view of what's going on in the market. And we always focus on a particular narrative that's coming. And right now that is the Ethereum Merge. And we've got all the information and data in here, including charts that we think will show you that this will be a potentially buy the rumor, sell the news event in the short term. So what that means is buy the rumor, sell the news is the anticipation leading up to an event is often greater than the payoff of the event. And once the event hits, the market sells off expecting that moment. So almost like a self-fulfilling prophecy. And we're seeing that as well in the data, not only in options markets, but also with news like this coming out. So Ethereum whales are moving holdings onto exchanges before the merge. That's a bit of a red flag. So it shows us and people watching that a lot of these whales are expecting a bit of a dump or a drop off after the merge. So they're moving their Ethereum to exchanges to potentially sell or layer in those bids ready to go so they can take profits, they can bank those profits, and then buy Ethereum much lower if there is a bit of a fall, which I think is pretty likely after a big event like this. So top 10 Ethereum non-exchange addresses have seen an 11% decline in their holdings over the past 3 months, while on-chain whale addresses have seen a 78% decrease. So yeah, very important. If you're seeing crypto moving to exchanges, it's really not going to be doing much else than being prepared to be sold or trying to spook the market. That's another angle you could look at here. You could think, okay, a lot of these Ethereum whales, they know what's going on. They're obviously very wealthy market participants. They could be moving their Ethereum to exchanges to spook the market, but I don't think so in this regard. This has been a slow move to exchanges over the last few months, and likely layering in bids to sell. I think that is super, super likely. And yeah, also we saw in the options volume as well in the newsletter where we're seeing markets are anticipating a big run up into September, potentially early to mid. And then at some point, especially when the event actually happens, we're going to see a big sell-off. So just keep an eye on that. Now, this next bit of news is ruling to keep Tornado Cash developer in jail for 90 days sparks backlash. This is a really big bit of news, but it's not getting a tremendous amount of coverage. So if you weren't aware, Tornado Cash was a mixer platform on Ethereum where it actually allowed participants to hide their wallet addresses. So you could effectively make private transactions. Now, the US Treasury is super concerned about this with everything that's going on in Russia and Ukraine and elsewhere with nations trying to avoid sanctions. So as soon as they learned about this, they've come down really, really hard on this and essentially shut the platform down. But what's happened is they've gone after the developer, one of the coders of Tornado Cash, and they've thrown him in jail for 90 days. And the Netherlands have thrown him in jail. So all these big police, what's it called, Interpol and whatnot, FBI, they're all collaborating to say, arrest this person because he's part of Tornado Cash. USDC, the stablecoin, also blacklisted any address on the Ethereum network that had any relation to Tornado Cash. So the US Treasury effectively gave USDC an order, they followed it out. So really not too much decentralization there at all. So that is something we have to pay attention to, that regulators are finding gateways into these markets and they're looking to put their stamp on it. So if you're doing something they don't like, they can absolutely put the clamps on. Now, Bitcoin is probably the exception to this because there's no real gateway into, pause addresses and whatnot, except if you're looking at on-ramps like exchanges. But back to Tornado Cash, I just wanted to highlight this because when we say that regulators are coming and regulation is good, there are some angles here, attack vectors, if you will, that are being squeezed and used upon as soon as a use case or a platform like Tornado Cash steps on the toes or does something that the big boys in Washington do not like, or that may interfere with some big macro event that's going on. They can and will come down very, very hard on this space at their choosing. Now, I'm more bullish on the regulatory framework and the forecast moving forward in terms of what's going on in the United States government towards cryptocurrency. That will take time. But in the interim, we just have to be very vigilant about this, that we don't want the government big boys coming in and, censoring networks or coders, arresting people. If someone builds a platform and then that platform goes off into the open source community and someone does something wrong with it, according to a government overseas, then the person that originally created or even wrote one piece of code, the government is going to go after that person, because a lot of these platforms are now quote unquote decentralized, but they were created by someone. So again, if someone wrote the code for, say, Uniswap, the governments could go after the people that wrote the code, even though they're not doing anything inherently illegal. People are coming on the platform and maybe doing something that governments don't like. So there's some attack vectors. It's not, I'm not sure I'm morally there on what they're doing, but they're going to do it. So we have to be, again, aware of it. This should be in our SWOT analysis when we are looking at our investments too, because regulatory attacks, guidance, all that. It's coming to a real head over this next phase. So just keep that in mind. All right, let's pivot over to my on-chain data for the week. I wanted to show you this because this is the 1 year HODL wave. So 1 year plus. So this shows you when a certain amount of coins are being held for 1 year or longer. It's a super important metric because it really has found the bottoms in almost every Bitcoin cycle previous. I just want to show you this here. So right now we're over here. So we're at a almost record or extreme side of the market where we're seeing a tremendous amount of market participants holding coins and not moving. So that means moving them from wallet to wallet, sending them to exchanges, things like that. They're just sitting in cold storage and haven't been touched for over a year. I can see here now we're in this rounding, let's say, peak, and it's trying to turn over. Now, whenever that's happened previously, when we've been in these rounding peaks, where have we been? We've been in bottom areas of the Bitcoin markets. A rounding peak here, just a bottom before the big run up, rounding peak here, bottom before a big run up, back of the bear market. Over here, 2015 to 16, where we've been big rounding areas. So a high percentage of the market participants are holding their coins. They're not wanting to sell. Well, who wants to sell at a bottom? You want to be selling in a peak state of the market. And what happens when price begins to rise? People holding for 1 year or above, those addresses begin to fall away. They begin to dwindle as people move them to be sold. You see where I'm going with this? So the opposite of that is the peak. See the inverse relationship here. Once we get to the opposite side where the majority is no longer holding their coins, once we get to that phase, then that means that a lot of coins are moving in and out, being sold, a lot of volume moving here and there. It means the market's in a very peak state, and we're probably in a topping phase. You can see it hasn't called the top because there's different looks to this, but overall on a big macro sense or a big view sense, it's pretty easy to see how this movement is going. And it also looks like the trend may be changing over time as, say, the macro situation changes and people don't really want to take their profits back into, say, something like a fiat currency. Do you really want to be selling your Bitcoin here in a bull market for Australian dollars, New Zealand dollars, for US dollars? You can make the case for US dollars, take your profits, sure. But as time goes on and our fiat currencies lose purchasing power over time, and they will as money keeps getting printed, nothing backing them, nothing stopping that, do you actually want to take your profit from your Bitcoin into those fiat currencies? And I think we're going to see the trend where this hill shape formation, or this S curve that continues to happen, just continues to exponentially move higher, but continues the same trend. We're always going to see people wanting to take profits, even some, early adopters will want to, early adopters, I say whoever bought last cycle, the cycle previous, if Bitcoin reaches, 200, 300, 500,000, a million, you do want to take some profits along the way. Most people would anyway, to maybe buy a house, change their financial situation, that sort of thinking. But overall, this is the trend, and I think it's super, super useful to look at. Make sure to check out lookintobitcoin.com. It's a free resource. Glassnode's fantastic as well, but is rather pricey if you haven't. We do have that exclusive data, but Look Into Bitcoin has it here. Why not go there? Also, to everyone watching this, again, I just want to bring up the newsletter because it was released yesterday, and I know you're all super excited about the release. We talk about all about the Ethereum upgrade. I look at the macro view. We also have Tristan, who's our fundamental analysis. That fundamental analyst, he went through and updated all the top 10 portfolio. I don't know if he did all of them. I think he did 6 because he just goes into so much depth and wants to give as much value. Couldn't do all 10. I think he did 6, but check that out towards the bottom. It's sensational. So if you haven't already, check your Substack, check your emails, get onto it, read it over the weekend, enjoy. If you're not a subscriber, why not get onto it? Cost of about 6 cups of coffee a month. So the offering is fantastic. And also buy and sell levels. If you're new to the game and you want to just get your head around where to maybe layer in bids, where value might be stocked, we have in our top 10 portfolio all the buy and sell levels that you really need to be paying attention to in this phase of the market. When we get into a bull market, I'll make those buy and sell signals a little bit tighter, a little bit more framed around a bull cycle where we have shorter dips and just bigger uptrends. So keep that in mind. Thanks for watching today's session. Catch you again on Monday for our Monday market update. Can't wait. Have a great one. Ta.